It's not even hardly been 5 days since I created my last video, and I've got so much to share. So I'm going to try and get through as much as I can, and then I'll name the video according to the things I've covered, as I always do. So we have to start somewhere, so here we are.
The construction slowdown has taken a far sharper downturn than expected. Total construction slipped by 3.8% over the June quarter, well below market forecasts of a 1% fall. That means an 11% plunge over a year, with residential construction the biggest drag. Engineering also down sharply, with the slump widespread across all categories and all states. Its hit cement maker Adelaide Bright and Hard today posted a 35% fall in profit.
Oh, well, what a surprise. Market expected, whatever that means, market expected, right? Market expected this to be bottoming out, right? We talked about this. So market expected June quarter to drop by 1%, yet the overall construction in June quarter dropped by 3.8%. Bringing the 12-month figures, according to Australian Bureau of Statistics, to overall construction, I suppose, activity dropped by 11.1%. Where engineering is 15.9%. Remember that infrastructure spend, I think that's what that means. I could be wrong, but that's nearly 16% for 12 months. No surprises there if you've been following this channel. And what does that mean for the earnings of the building suppliers, earnings and share price?
And a bad day to release bad news. Borel shares crashed 20% as it warns the construction crunch is far from over.
And unlike some CEOs, and we're not going to mention names, there is a CEO of one of the building material suppliers that I respect, and I'll show you why.
Caught in the lull between the construction bust and the infrastructure boom, cement maker Borel has warned of a slowdown ahead. Borel shares nosedived 20% today as it revealed a halving of profits from ongoing operations and a weak outlook. CEO Mike Kane, who's a significant Borel shareholder, says the sell-off is an overreaction. He's just being realistic.
So our view is that the outlook isn't as bad as the market would suggest. We said that in the next financial year, we could be down anywhere from 5 to 15%.
Okay, that's not a good start for the credibility, but there's more. He opens up and the interview takes an interesting turn.
We said that in the next financial year, we could be down anywhere from 5 to 15% in our net profit after tax. I think if we're down 5% at the end of the year, this reaction will be viewed quite differently. But what is that based on? Where do we come up with that type of an outlook? Well, we look at the underlying markets that we serve. So we serve the housing markets from Australia to South Korea to Canada to the United States. And all four of those markets last year did not improve. We think Australia has another year of correction in housing to go through.
But you...
Wait, what? We are not bottoming out? Australia has another year of correction in the housing market? Okay, there's credibility going up, so not talking his own book necessarily. And why is this infrastructure spending that we keep hearing about not going to save the housing market?
But you don't think that the infrastructure projects and the pipeline that's coming will necessarily offset the dip in housing? Why not? Because last time we spoke, you were fairly confident that this infrastructure pipeline would fill the gap.
Here's what happened. So a lot of the infrastructure projects are delayed. And if they're not delayed, some of them are rolling off, okay? And that's more of what's happening in New South Wales right now. There's a lot of projects in Victoria that are being bid on right now, a vast number of projects that we won't see in the next 12 months. And so it's a timing issue. The decline in housing is not synchronized with the increase in infrastructure.
What do you put the delay in this much needed infrastructure down to?
You know, I was asked that by investors this morning and analysts, and I think when you realize that almost all of these large infrastructure projects are bespoke one-off projects, they have never been done, and they won't be done again for another 30 years. And so therefore, the construction industry, as it adjusts to this, along with the investors in that business, have perhaps got the timing of these projects off. They either were too optimistic in their forecast as to when these projects would start and when they would complete, or the size and scope of the projects is much larger than they initially expected. From Queensland to New South Wales to Victoria, everybody wants to spend billions of dollars on infrastructure, and they all want to do it at the same time. And I think you can understand the kind of log jams that can develop as a result of that.
So I'm sure that Mike Kane, the CEO of Borel, doesn't really care what I think about him, but I'm a big fan, and he's got more. Seems like a real gentleman and a very good businessman who is not full of BS like some of the others. Someone you can learn a thing or two from.
We still have made significant investments. So in the last 5 years, we've made over $600 million investments in quarries in Australia. We've made major investments in the U.S. and more than doubling the size of the business with the Headwaters acquisition. We're just now announced today over $300 million investment in our USG Borel joint venture with the Knopf family.
But he wants to see growth in Australia. Two of the major things that you've just mentioned that you've invested in, one's in the US, the other is right across Asia, Thailand, Vietnam, right, China, etc. What settings do you need to invest more to grow in Australia?
75 to 100 million more people that are in Australia. I mean, this is one of the challenges in Australia is the size of this economy and its likely size over the next 50 years.
What settings do you need to invest more to grow in Australia?
75 to 100 million more people that are in Australia.
Now, if you've ever asked yourself or tried to ask a politician, why are they so hell-bent in immigrating so many people from all corners of the world, no matter what, at any cost, from everywhere and anywhere, there's your answer. But this man is honest. They need to see big Australia. They need to see Australia open for business, like big economies like America, where it's rock and roll, for lack of a better term. I may not necessarily agree with it, but that's what he said. And he's being honest. He talks to the government. Government knows this, but they would never come out and say something like that they would like to see Australia having 75 million to 100 million people in it. To be profitable, we've got to understand every country is actually a business, which makes us all the employees of that big corporation, in this case, Australia. And you know what? I'm going to leave it there and split off what I want to talk about next into a separate video right after this. Just my last weekend down Crookwell Way, that's all. Thanks for watching, and let's talk again soon. Bye for now.